Suresh Senapati, on that HR issue that was raised earlier, let me read out a point of criticism to you and ask you to respond to it. We are concerned with Wipro's insistence on keeping utilization rates between the 70s and 80s. A, because supply is tight in terms of experienced hands in a particular range, and B, because Wipro's salary hikes have not been up to mark with what some of their peers have delivered, which is why attrition levels could actually remain high. How would you respond to that?
Well, I think there are multiple ways of looking at things. You would have seen examples of other companies, their attrition, the increases that they have given, etc., etc. So it does not look like any one single reason which is resulting into this kind of high attrition that we're seeing in the marketplace. The good story is there is demand. The not so good story is there is a lot of attrition, and people are, particularly in this group of experience of 3 to 7, become much more vulnerable. They want to see around and see whether there are career opportunities far superior, etc., etc., apart from higher education separations, etc. So we think this is something applicable across, and hopefully it will stabilize soon enough. So far as the cost and utilization is concerned, as you saw, we have given in February, we will give again in July, vis-a-vis certain vulnerable segment that we are talking about, and also the restricted stock unit, which would definitely have an adverse impact so far as cost structure is concerned, but it will definitely help us in terms of overall improved people management processes, people management issues are concerned. And so far as utilization is concerned, I think it is the way we have gone about overall our supply management. We've invested a lot in terms of the supply management back-end engine to be able to get a higher level of transparency on bench sitting across geography, across practices, and across verticals, etc., etc., and therefore a single point view available, ability to make people more fungible, transform them, train them, as opposed to a particular percentage of the people to be in the bench, as opposed to an absolute number to be on the bench, etc., etc. So I think many of those aspects has helped us to be able to improve utilization rather than trying to cut costs in any manner. I mean, we will not be wanting to do anything which will make us lose revenue, though at every point of time, depending on a particular skill that you need and the skill that you have, there could be opportunities having been lost. But objective of increased utilization is not to shut away good customers or good quality revenue to come in.
So Suresh, what kind of margin implications do these two factors have? One, if you have to do more lateral hirings or look at further increments to temper attrition, do you think it could have margin implications during the rest of the year? And B, the one issue which you pointed out which had a good effect on your margins this time around, the benefit from the hedges that you were running, do you think that's played out in this current quarter, or could there be further upsides in subsequent quarters?
I think the hedges are that we had for the quarter one, while overall hedge book remains almost the same, about $1.6 billion level in the beginning of the quarter to the end of the quarter. Some of the hedges that we had for quarter one were more attractive than what we have for quarter two. Of course, there are some open ends so far as quarter two is concerned, and therefore it will be a function of how it pans out in terms of the spot movement and the premium movement in the current quarter. But definitely for sure, as it is, looks like there is some amount of a headwind as compared to what upsides we saw in quarter one. Apart from the people-related investments that we were making, we will work on varieties of other levers. But while we don't specifically give any guidance for quarter to quarter, in a medium to long term, they are kind of a margins which are sustainable margins. Is how our positioning has been, and it hasn't changed.
Suresh Vaswani, can you take us through Wipro BPO's performance in the current quarter compared to the previous one?
Wipro BPO, the BPO business per se is becoming an extremely big differentiator for us, because increasingly customers are looking at substantial sort of transformation. They're looking at substantial re-engineering, and once you do that, you have to start looking at the processes and fairly actively. So the BPO business of ours has done very well last year. The BPO business, in terms of funnel outlook, etc., looks very, very robust. We see a lot of integrated IT BPO deals coming up. We have invested a lot in terms of our transaction processing capability. So one big measure is that more than close to 55% of our business in BPO is actually transaction processing, and that business works very, very closely with IT in terms of creating substantial impact with customers. We have been very strong in horizontal BPO processes, and I think they've reached maturity, and we've delivered on that. What we are now looking to do is to build in a lot more vertical process capability in our BPO business as one of the major initiatives that we are taking in terms of creating opportunities with our customers.
Girish, going into this quarter, there were some concerns on what was happening with budget trends, in that budgets had actually been slashed for IT spend going into the next year. Is that something you're seeing in the verticals you track, whether it's BFSI or telecom, etc.?
No, I think we are seeing fairly stable budgets from most clients. So there's not so much budget pressure from clients. And also I think they've got to a good start by not only having the budget, but having the intention to spend it. So we have seen early signs of new projects getting kicked off, which is how we saw such a strong volume growth. We are also seeing discussions happening for how the second half spend will happen. So at this point, I would say the demand environment looks fairly benign and strong. So the worry about budget cuts and budget compression seems to have been probably overblown.
Suresh Vaswani, that slippage in energy, has it got anything to do with BP?
No, it doesn't. I think what you're seeing, the sequential decline that you're seeing in ENU is very, very quarter specific, related to project closures and one-time revenues that we had accrued in the previous quarter. Our BP business continues to do well, and we are making. There's no impact of the BP crisis, so to speak, on our revenues and on our potential and on our trust insofar as BP as an account is concerned. It is one of our very strategic accounts, and we continue to build strong traction there.
Girish, can you update us on what's going on in Europe with sectors like technology, telecom, and even BFSI? Are you seeing any sluggishness or impending sluggishness, or on current reckoning you can't see any slowdown from that side?
So I was in Europe 2 weeks, and I had a chance to meet many of our big clients. And I think the good news is that there are three things which I think are positive. One thing is that most of our coverage today in Europe is in the northern European part, UK, Germany, France, the Nordics, which are relatively less affected by all the turmoil that you've read about in Europe, which is really affecting Greece, Spain, Portugal, those kind of countries. So if you look at our coverage, we are kind of away from the hotspots. The second part is that even though the broader economic environment may cause some concern, at the micro level, at the companies level, actually they're seeing some strong traction. And imagine the companies in Germany and France, we have seen a 20% reduction in the euro, which makes them highly competitive in the export market. So they are seeing an unprecedented boom. So I think there is strong opportunity to partner with them to take the growth to the next level. The third thing is that because we have localized well in Europe and have geography heads in Germany, France, and elsewhere, actually the localization is helping us gain traction. And I am fairly confident that Europe will do good for us.
Gentlemen, thank you very much. Good luck for the rest of the year. Thanks very much for taking time out today. That's Wipro for the first quarter. Numbers are good. Margins ahead of expectations. Guidance is pretty confident. So the stock's up 2.5%. No problems there. Indeed.